We open a local office that's staffed full-time. We host the local non-for-profits in that office to gain as much access for as long as possible to as many people as possible, to clearly identify the real issues in the community that aren't being published, that aren't being talked about. So we're crowdsourcing the ideas to regenerate their place based on what their understanding of what is broken. And sometimes it's the fire department bringing to light things that the politicians don't want to talk about. Sometimes it's the not-for-profits. Sometimes it's the school children, right? Sometimes it's the high school kids that have ideas their grandparents can't see any longer. And sometimes it's the grandparents who understand the history of why a place has been disinvested and degraded itself.
Welcome to the Regenerative Real Estate Podcast, a show about human environments and how they can be used as a force for good. Conversations that educate and inspire people looking for a different way to do real estate. I'm Neil Collins, and on this episode, I'm joined by Sean McLean, the managing partner behind MPact Collective, a truly unique community-based development firm that is transforming the way large mixed-use development projects come together. For all the parents out there with young school-age kids, I'm sure you can relate to the phenomenon of finding yourself hanging out with the parents of your kids' classmates. Naturally, we want our child to have a social life, so we end up at places like birthday parties and soccer games and are required to socialize and make friends with the other parents. And this is how I ended up making a new friend named Tom, who runs a general contracting firm in town. Recently, Tom came by our office and we got to chatting about the work that we do at Latitude. This was the first time that we actually had the chance to talk about regenerative real estate and development. And maybe it's because our office is dripping in plants and we have shelves full of books with titles like Regeneration by Paul Hawken, Birding Sweetgrass by Robin Wall Kimmerer, and Emergence Magazine. But I could tell that Tom had something on his mind. It turns out that Tom was unfamiliar with the concept of regeneration, and he went on a bit of a diatribe about how solar panels and Priuses are not going to save the world. He had an axe to grind that, in his work, sustainability equates to higher cost. Now, this is not a new conversation for me. And in fact, I really appreciate Tom's willingness to speak his mind because I completely agree with him. I think that many people still equate regeneration with being green or sustainable. These terms seem to trigger some people, maybe because they feel threatened by the message that they need to live differently or that they need to give something up in their lives. These frameworks acknowledge that we are doing bad and that we must do something that is inherently less bad. Now, the shortcomings of being green is that it doesn't introduce how we can shift the culture from extraction and degradation to ultimately creating the conditions for life to thrive and co-evolve. To do that, we must find ways to honor our places by engaging local stakeholders in a co-creative process, while simultaneously working with nature rather than against it. This is where regeneration is more about the process rather than the product. A building does not need to be cladded with solar panels on all sides, with a bank of Tesla chargers to make a positive impact within a community. This is why I'm excited to have Sean McLean of MPact Collective join me today. This is a group that has combined disciplines of urban planning and development while imbuing a regenerative process that helps to transform communities and do it in a way that can be faster and more profitable than conventional development. I left this conversation so lit up about their work, and I know that you're going to enjoy it as well. Before jumping into the episode, I want to give a shout out to our friends at Humanize Wealth. This is a unique and extraordinary wealth management firm for individuals, families, and foundations who seek social impact, environmental justice, and shared prosperity in addition to financial returns. It is not every day that I come across firms run by purpose-driven professionals that have extensive experience managing investment portfolios that care about the things that we so deeply value in the regenerative movement. They run their company very similarly to ours, where their approach is based on the quality of relationships they have with their clients and creating personalized and values-aligned solutions for managing your portfolio. If you are interested to explore the purpose, power, and potential of your wealth, I highly suggest you schedule an introductory call with them by visiting humanize.wealth.com. Now, on to the show. Okay, Sean, it is just a pleasure to have you on to the podcast today. And I really like the story of becoming. And not everybody is just born into regenerative development, impact related, community development, certainly. And so I think it's just really helpful to understand where you're coming from. And I want to give you the opportunity to really pick it up wherever you see that initial thread into this work.
Sure. Well, I think it's a matter of evolving into it. Your path always leads to where you are, right? So I grew up in a family in Nassau County, Long Island, the birthplace of the American suburb, and post World War II suburban sprawl and the death of main streets and the the lower use of rail and the commuter car and the Robert Moses highways all over the place. And I think the wrongness of a lot of that gets ingrained in you in certain ways. As you go through life, you go to college. I studied philosophy and psychology and eventually a master's degree at NYU in international real estate development. And when you start to look at how other people do it and how the history of it and the psychology behind it, you can start to pick out the things that need to be changed, right? And so as you enter your career, you're trying to make money, right? You're trying to build a business. You're trying to be an entrepreneur. You're trying to serve other masters that you perceive to make the rules and regulations of the world in which you have to act, especially in real estate. There are very rigid boxes to check in order to get capital, in order to move projects forward, in order to get political support, until by necessity or by epiphany or by some sort of awakening, like listening to one of your podcasts, you start to recognize that you can change those rules, that those rules were written by other men and women that may or may not be any more important or intelligent or well-meaning than you were when you took a look at them and said they were broken, right? And I think that's where you start to look at that understanding from. I was blessed to be doing work in New York, which, like California, has the most rigid environmental and entitlement process in the country, right? So the process of entitling land or changing entitlements for land is extremely difficult. And it's something that a lot of developers have fought against, the process of the State Environmental Quality Review Act and the process of entitling property and the rules that go along with zoning and the environmental regulations that come with that actually gives you the right to build on any size piece of property or within a district in a city or within a downtown or near the waterfront. You start to look at all of them as a path to changing the rules or to regulating those things that are to the benefit of the development and the world itself. As you start to grow as a person and understand that just producing the returns for your investors is not enough if the community itself is failing, because then the assets long-term are at risk. They're at environmental risk. They are at social risk. They can become degraded properties over time because the right social enhancements and regulations and improvements aren't there to create a resilient economic community for that same place, where you may have a successful initial lease up, but 5 or 6 generations of turnover later, the economy and the place have not improved just because your building went up on the side of the highway somewhere and was the newest thing in town at the time, right? So then you start to ask yourself, how do I integrate economic resiliency, climate change, smart growth, walkability? How do I codify happenstance into planning places? And in this case, what we've specialized in is large scale zoning codes and entitlement packages for cities. So we could be entitling anywhere from 2 million to 12 million square feet at a time on behalf of a municipality to create these resilient communities that have regenerative properties to go forward over time confidently and have the tools to change with markets and with scientific understanding and social understanding to make sure that they remain resilient and not stuck in the Euclidean zoning and typical type of entitlement process that is rampant across the United States. So it's a process that we've kind of invented to go through and solve that problem and regulating that.
Well, before we get into that, I'm curious, this transition into MPact Collective, were you already going with the company and doing more conventional real estate development with it, or were you coming together saying, look, we see an opportunity here, there's a different way to do it, and we're going to create a group to go out and meet that need?
It was a series of companies that built upon each other to get to that point. And we just happened to find the right formula to bring this group of people together to try and address all of those needs as MPact Collective. And the idea was we could take it to the next level of real commitment to regenerative development, because we could embed subcode into what we were doing, right? We could really embed that impact in, but there were always expectations that were counter to it. The way we were operating from an economic point of view was not in alignment with creating fully regenerative development in places. We weren't able to offer advisory services, so we didn't have fee income. We weren't able, we had to sell property to provide a lumpy income back to ourselves as developers. So in that sense, we were going into a community, we were doing all of this community work and uplifting the value of land and then selling off the increased value in those pads. It wasn't perfectly aligned with the overall community, and it couldn't be done everywhere. It can only be done successfully where there is substantial market uplift and market pressures to create that additional product. And so we wanted to be able to offer that to municipalities where they could take advantage of the uplift, or other people in the community could take advantage of that uplift and move the entire community forward, where it wasn't just for a single purpose development, right? So when we create these zoning codes, right, it's this spider web of all the inputs that go into land development, and that's traffic and sewer and schools and the 10-year future of schools and the tax base, and understanding what the economic progress is or receding economic environment, depending on what drove the economy of that place. And as we build the entitlement ecosystem, we can now openly invite all the other investors in the country in a free market to invest their money as of right, as long as they follow the rules that were set in place. And then we set in place all what you could essentially call taxes to pursue the social and environmental good of the community. So if we bring a property from $0 to $100, we can tax it back down to 60, and everybody's still really happy, right? The investors get to spend their $100 that they want to spend to build their building. The property seller, the person who owned that property for 3 generations, who can't make a living at the store anymore, they can sell that property now for $60 where it was worth $0 or $2 not too long ago. And the municipality creates a fund of $40 to invest in diversity education, early childhood education, environmental resiliency, in new programs to create entrepreneurship locally, all of these different things that are very place-based. One of your other guests had been talking about the competition between not-for-profits that are trying to address these spaces and the finite zero-sum game that they play in warding each other off from the free money through grant programs and foundations that are trying to do good work. If we create an economic environment that funds those through capitalist endeavors, you're inviting the investment world to pay for those things, not to donate to them, to pay for them. And they don't get to choose which ones get paid for because they're just writing a check to the municipality, and the municipality is being trusted to have set up the rules and regulations and programs that are being implemented in partnership with the community, right? So that's what our thought process was for MPact, that we could take that economic uplift that we had been able to create through this sophisticated zoning entitlement process and add all of these regenerative practices to it in a way that was codified and regulated and still soft and inviting for investors to say, okay, I understand. I can build 100 units here. I write these 3 checks. It's as of right. I know what I'm paying in taxes. I know what it's going to cost me to build it. I can estimate my cost of construction and my soft costs for my architects. And all of this stuff can be done with very, very clear expectations of outcome. So there's no more opacity, right? The community knows what it gets. The government knows what it has to regulate and invest in. The investment world knows what it can make by making an investment in this place. And they know the time frame in which they can make it. And if you can successfully set those things up, you can do anything, right? I mean, it's amazing, right? You can regulate anything that's important to that place. And that's what's really great about real estate is it can be so place-based that creating programs to reduce or destroy human trafficking in the Hamptons, which nobody even wants to admit is happening, through redevelopment of areas that have been disinvested over the years. That's one example of place-based regulations that we've put into zoning codes, right, that actually are in place in the Hamptons in New York, because there is human trafficking and prostitution and opioid rings that are operating on a regular basis in open air that nobody wants to talk about. In other areas, we're talking about massive sculptures for public art and black box theaters, right? Like, you can't say one thing fits the other. And you can't say one is more important than the other because it's the generational integrity and character of that place that should drive its outcome inside of a reasonable economic conversation.
Let's continue down that process of being place-based. How do you go determine which community that you want to work in?
So there's a few different paths that we've taken. In some cases, we have answered requests for qualifications as a master developer, where the community says, we're inviting in the best ideas. We'll choose from one group to try and implement those ideas for a redevelopment of, say, a downtown or a transit-oriented district or something like that. There are other cases where we will solicit the opportunity by partnering up with large landholders, say a company that owns a 200-acre defunct mall that used to be like this lifeblood of community and is now has like a Home Depot and maybe a couple shops in it, but is essentially a dead place that could be redeveloped. So where the municipality and the property owner want to redevelop, we produce a different type of opportunity to work to redevelop that as a master planned mixed-use community with the same rules and regulations that would drive a downtown area. We're just actually working on a new case now where somebody who owns a lot of disconnected parcels, interested in developing and kind of rebirthing an old city in New York, has come to us and invited us to start to meet with the Business Improvement District and the Chamber of Commerce and the mayor and the Economic Development Department to say, as a group of interested landowners and as a group of interested economic and political entities, we can put together a program that's fee-based, that we can do this on your behalf, where we don't necessarily have any interest in the real estate itself, but we're working on behalf of those groups. Similar to, you see a lot of the larger architecture firms like Gensler or Dover Cole going into places to create these form-based zoning codes with an intention of helping the city redevelop. So we will do that type of work, but it's much more robust than usually what happens, right? Because we want the whole package, or we don't want to do it. There's only a handful of us, right? So we have to choose our projects where our human capital is best left to go. And this can't be done everywhere. Not everywhere can be or should be saved. We're really committed to those places that are historical places, right? We're not fans of NEOM and building shiny new cities in the desert for the 1% of the 1%. That stuff can happen. It's just not part of where we want to spend our time, because nobody really wants to invest in those broken places that have character and integrity and I think real emotional loss for humankind in those places as injury happens because people are forced to leave there. So we have to pick our places carefully, right? And
I just want to underscore that, because I think a lot of people, when they even hear regenerative development, there's so many images out there of these utopian greenfield sites, or this whole eco-village movement and going down to Costa Rica to build this haven for expats. And this is exactly where I was hoping this would go, around how do you save places and how do you do this within the urban fabric?
No.
Especially you're in the Northeast and there's lots of towns and villages. You don't have to be in Manhattan to be a successful developer, and you don't always have to go do greenfield sites every single time. So yeah, really interesting. And just to get a little bit more clarity, Sean, what are some of those factors, because you do have a small team, that aligns where you say, yes, this is the right project for us?
So political will is a massive, right? Political will and understanding, and finding elected officials that are committed to doing hard things and having hard conversations with their constituency. I think that's of real importance. Developers they shouldn't, and they often do, go into places and force their will onto the community, saying, I know what's best for you and you should thank me for being here. And that is practically a mantra for anyone being raised in real estate development. Now it's changing through the likes of these types of conversations and the groups of people that you've gathered to your podcast, but it's still very, very slow to change. So political will and understanding, where they understand that there's a different way to do these things, and they're willing to have the hard conversations to learn how to change. But it's a real conversation, right? It's not us coming in to tell them what to do, and it's not them telling us, you'll take this or you won't build here, because that works both ways, right? There's lots of elected officials saying, well, every developer should want to be here, but for the last 40 years, nobody's built here, and that's their fault, not ours. When we went into the city of New Rochelle, we ended up entitling 10,000 units and 13 million square feet of development to be built. Within the 100-acre core downtown, they had 256 individual districts and special permits that they had created over time to do justice. Somebody's brother-in-law wanted to do one thing and somebody else wanted to do something. It's that type of environment that breaks places over time. So you need the political will to say, okay, we didn't make that mistake, but we're willing to own it and change it in order to move that forward, right? And the people who are running New Rochelle have done that in spades, and they continue to. I mean, they are amazingly innovative. They work with us to do some really great, groundbreaking stuff, and you don't really often find municipalities like that. So the municipal will is really important. The second portion of this is resources, right? As you said, going out into the desert and pretending there's water, it just it just doesn't work. I mean, it doesn't work. People pretending they're more comfortable in Phoenix than they would be in the Northeast because it snows for 4 months in the Northeast and it's 150 degrees for 4 months in Phoenix. I'm not sure I could legitimately choose the heat with no water. The climate migration over the next 50 years is going to be massive. We are big believers in the Great Lakes region. We are heavily investing in Rochester. We're looking at Syracuse is going through a boom right now, along with Rochester. We're looking at major projects in Cleveland. I have a twin brother who's developing all over Chicagoland. And I think the Great Lakes region in general is going to be a massive receiver of forced climate migration because of the lack of resiliency and regeneration ability and ability to continue to live in places that were not meant to hold significant human population. So the availability of water, energy, sewage capacity, the ability to remove our waste in a way that is sustainable and long-term resiliency is really, really important because it removes risk and it removes a long-term risk of the community. So the problem we have by taking that approach is that we're not in alignment with most private equity investors because most private equity investors have a 60-month timeline. And so as long as the world isn't going to fall apart in the 60 months in which they've been invested in that building, then they don't care that 10 years or 15 years, there's risk to the next several owners, right, of that property. And who have they passed that risk on to after they've exited? Probably often with Fannie Mae or Freddie Mac long-term financing. So we're passing it off to the bond markets, which is the general public and pension funds. So we can shed that 60-month investment onto the public at large and have massive future debts and liabilities throughout the Sun Belt and Florida and areas that are inhospitable to long-term resiliency by pawning off that future disaster onto the general public in long-term core-based ownership programs, right? And that's what's happened. So now you start to see the insurance companies pull out first, which is starting to happen. The pension funds are going to have to follow suit. And when all of that starts to tumble down, they're still going to have all that possible capital that they have to invest. They still have to find buildings to insure. They still have to move their businesses forward. We are betting that that's going to happen between Chicago and Maine, right? That's where you'll find the climate smart and climate safe investments of the future and the most comfortable, long-term, economically resilient places to invest as climate migration starts to really take shape in this country.
Yeah, no, I'm with you there. We lost all of the Southwest listeners, but that's okay.
Sorry, guys.
So we're looking for political will. We're looking for resources, also long-term horizons on where climate is going. Once you do have maybe a property that you put under contract, or you're working with a legacy landowner, what is the process that you go through, Sean, that you think is different than a conventional developer that is really just looking at it from form-based code, how many units we're going to be building? Like what are you doing that's different?
For the most part, there's a couple of processes that are different than the developer uses and the planning firms in which they typically employ use, right? Typically the planning firm will go in there for a week if you're lucky and have a big budget to do a charrette and some walkthroughs and get some newspaper time and meet a few dozen people in the community for some limited window of experience of that place, right? And then try and embed those values that they've gathered over that short amount of time into the zoning recommendations that come from that. Their clients are often the developers and or in partnership with the municipality. And so economics are certainly going to take precedent there to make sure that there's enough density of this predetermined outcome to be planned in the zoning code that's being recommended by the consultants. We turn that process into a little bit of a more regenerative process, I think, because we open a local office that's staffed full time. It's open all the time. We host the local non-for-profits in that office to gain as much access for as long as possible to as many people as possible, to clearly identify the real issues in the community that aren't being published, that aren't being talked about. Right, because it's those underlying issues are the things that keep people down. They keep communities down because it holds them in trauma, right? And a lot of the places we're in, the populations we're dealing with are held in trauma. And I mean, for fun, I like to read about epigenetics and how the biology of belief and like how these things form over generations of those places. And when you're trying to regenerate a place based on a place-based philosophy, you have to really understand the place. And in order to do that, you have to get to the people that aren't coming out for a 1-week charrette. As well-intentioned as those things are, it's not really coming to know the place. And so that's one thing we do, I think, quite well, is really, really engage in the public understanding of that place and how they can co-create the zoning regulations that are going to then govern their place, right? So the community benefit bonuses that we implement inside the zoning code, that comes from those people. We call it crowdsourced placemaking, right? So we're crowdsourcing the ideas to regenerate their place based on what their understanding of what is broken. And sometimes it's the fire department bringing to light things that the politicians don't want to talk about. Sometimes it's the not-for-profits. Sometimes it's the school children, right? Sometimes it's the high school kids that have ideas and view things through a different lens that can add to that conversation that their grandparents can't see any longer. And sometimes it's the grandparents who understand the history of why a place has been disinvested and degraded itself, right? So that place-based approach is unique, I think, and allowing the public to implement governance over themselves in that way, where their voices are regulated into the environmental and zoning regulations and entitlements of the future developments, is very empowering. And that makes for future participation, which makes for resiliency of that community. So we embed the voices of the place into the codification of the physical environment.
At what level does it make sense to put that much effort into it? I mean, do you get pushed into those large-scale master planned projects because it's got the economics that affords that time to work with the community?
I think so. Yeah, I think we do, right? Because we're not the type of people that could make a living building Walgreens and selling off triple net leases. We just can't. We can't bring ourselves to do that. We'll live a tortured and difficult life because we have committed to doing something better. And so we get drawn into these things that are substantial. However, I will tell you, our track record says that we get millions of square feet approved across hundreds of different properties in timeframes that are the speed of light, compared to one group trying to get 175 units approved on the side of a road in a ditch on a green field. Like, you could take years off of the process of the one development by including the entire community there, right? So where the New York State Environmental Review process, if you ask anybody in New York, it's going to take a minimum of 18 months and probably 36 months to go through for a typical project. If the community fights it, it's a 6-year zoning battle, and everybody hates each other when they're done if something gets done, right? We did New Rochelle in a year, start to finish. That's with the community, with a 7-member board, bipartisan, unanimous support. We've updated it 3 times to increase the social and environmental regulations to create a really regenerative zoning code. We've continued to add development units. The market continues to react to it. We've now created an environment where any ESG marked capital qualifies just by following the zoning code, because everything has already been regulated into place for them to check every box, and nobody has to rely on a developer to carry through with some sort of impact plan that they're really not interested in doing. And that was done in less than a year, start to finish, as of right. Any developer comes in, 60 days, they have their site plan approval. They can go build what they want, just check the boxes, write your checks to the municipality, and off to the races. And so it's humbling and amazing to create these things that are far bigger than ourselves, far bigger than any individual effort, right? And you change the lives of people you'll never meet by putting in pots of money for investments into local businesses, right? And regulating requirements for minority-owned businesses to go for construction contracts, and through these processes that you can actually codify, that will survive any human that's currently running anything, right? Like, it becomes regulatory and law. There's no more contract law. There's no more handshake deals. It's part of zoning. And that zoning is very difficult to change in the future without the right attitude and reasoning for it. And so we get drawn into these big things because it's amazing what you can do with these big places, right? It's amazing what you can do on that level of opening up opportunities for development. And I will tell you, all things are big things, right? Because when you look at a community and you look at the underlying zoning that has not been built, right? Even as broken as the underlying zoning is, as Euclidean as it often is, and separated it out, there's millions of square feet that were not built, that did not contribute to the economy. And they didn't with the excuse that the economy didn't choose them. But it's not that. It's that they didn't choose what the economy wants now, right? And the whole trick is that we create these zoning plans that are fluid. The market decides what to build where, not the planners, right? The form-based codes that we use invite the market to say, in 2019, we loved hotels. In 2020, hotels no longer exist as a development option. But the same building pad could hold an assisted living. It could hold a multifamily building. It could hold an affordable condominium building. It could be a life sciences research center. The pad itself doesn't matter. It allows entrepreneurs, and across the board, real estate developers are brilliant entrepreneurs when the market allows them to react to it, right? And that's part of the key. I mean, we really do have real trust in the resiliency of local real estate developers, regional real estate developers that are not answering to a set of boxes that were ticked off in a boardroom that are follow the leader capital type expenditures, right? But the real people, the real boots on the ground developers that are very substantial. I mean, 30,000 units, 10,000 units, people, really well-heeled regional developers can be extraordinarily creative in what they can bring to the table if they're given the right environment to build.
I want to take a quick opportunity before we continue this episode to talk about the work we are doing at Latitude Regenerative Real Estate. We see real estate as a catalyst for regeneration where we can change the way that we inhabit the planet. The hard part, though, is that real estate is complex and it requires specialized knowledge in areas around design and planning, capital and investment, and community engagement and construction. That's why at Latitude, our work goes to serve those that seek to create legacy projects that strengthen communities and develop ecological resilience. If you are needing help putting together a project like this and could use an experienced and dynamic development and sales team, we hope that you'll reach out to us at chooselatitude.com. Okay, let's get back into the episode. It seems like you know your box of the entitlement process. Have you ever been tempted to go into horizontal or into vertical development?
So we are, yeah. So we're doing a lot of that stuff now. We've been doing the horizontal development for a while, and partnering up or selling off those horizontal pads that we control from this development. And we've started to now, rather than give away the future of that value, we're looking to contribute that uplift into the development as equity, right? So we can use the contributed land value as equity to borrow against for the construction loans and move those projects forward. We're doing a really interesting project up in Rochester, New York. It's over 100 acres. We were working as master developer. We created these liquid entitlements. We're trying to offset all of our electric use by a series of community solar plants that are attached to the development. And moving through that master developer process, we decided to start, rather than selling off the pads, to start building our own projects. And that was one of the reasons we spun off as MPact and came together, is because we wanted to start building for the long term and holding these projects that could build wealth and have the promise of resiliency within those communities. Because we go through this process and you develop these relationships. And then the way finance is structured today, you have to dump those relationships in 60 months, right? There's a financial expectation of exit. And we are trying to craft a process and find the capital that allows us to invest in the longevity of those places. Because the longer you hold property in a place that's growing, the more valuable that property becomes exponentially, and the more opportunity you continue to receive as that place and the places around it increase in their economic viability, right? It's that market making that is really exciting, and it's really possible. It's opening up the world to investment and sharing that wealth across the board creates really resilient long-term investors. And we're starting to meet some like-minded people that have regionally invested for their own ideas of long-term holds, family office type long-term investments to create places and legacy, not work as merchant builders. Now, it makes it much harder to make a living by not working as a merchant builder. So we are always trying to balance making payroll and paying rent and being able to invest in new communities with our ideals of how we're going to fix these troubled places and show this kind of open source code to the world of how you can scale this and implement this in other places to make places better, right? To make this overall a better experience for those of us who plan on sticking around for a while.
But let's go into the capital a little bit more, because I'm really curious about that evolution and maybe even the evolution of your pitch towards attracting sufficient capital to projects. Whenever you first started, were you looking for a specific type of investor, or was it just here's the yield, here's the project and the pro forma, and anybody and everybody is in?
So we definitely went heavily down the road of impact investment funds, tried to attract those groups that were looking to put money out for high level of impact and measurable ESG results, and trying to put that together. But the money wasn't really earmarked for things as risky as real estate entitlement, right? There aren't too many industries in the country that are ranked as risky as real estate entitlement. It's hard to find institutional capital, even in the impact world, that want to pursue that early stage development process. Mm-hmm. Right. So what we've been doing recently is friends and family pass the hat around type of equity raises, right? So where we find projects and we can start to identify the risks, and we raise the capital on a project by project basis. We find people that believe in, that look at the track record and say, okay, this looks like there's a lot of protection for the downside. We have a track record of returning capital with returns by selling properties. Rather than building those buildings, we have a fallback position of a business that we know well, where we can develop a building, bring it to building permits. We do all of the underwriting. We do all of the pro formas, the construction estimating. We know all of the impacts that the municipality has to put in place. We help them design the fee structures and the payments in lieu of taxes and the tax incentives. So we can tell investors what they will make if they buy this pad and build this building. And so we're just trying to translate that, to your point, to normalize what we do into something that doesn't care about the impact as much. Or we're trying to become vertical developers so we can tell the story of equity multiples through an innovative process, rather than the regenerative story, rather than we're going to help all these people, we're going to fix the environment, we're going to do all these things. We have to control ourselves. We have to learn a different language that we don't natively speak, which is the translation of entrepreneurship and regeneration into economic growth and institutional language. And we have to do our best to not offend those people that control the capital and have decided to go in certain directions. And I'm sure I've offended a number of them in this call, but it's not intentional. And it's not a personal judgment. There's a system that's set up, and that system is difficult to work through if you don't believe in the ethos that they operate in, right?
When did you start to see, or have you started to see it? It sounded like you said some family offices have started to pay attention. What do you think needs to happen there? I guess I'm really curious on what it takes to mature the capital markets so that they can start to think not outside of yield, but with yield in mind as well as other bottom lines.
I think it takes what you were doing. I mean, it takes knocking on a lot of doors and having a lot of different people saying the same thing, a lot of really smart people trying to say the same thing, and demonstrating better than market returns. We have to produce better than market returns. I mean, the impact world 15, 20 years ago was ridiculous. It was a bunch of people saying, I'll give you lower than market returns, but we're going to help all these people and they're going to smile and it's going to be great. It's a worthy endeavor, but it's not realistic. Right. So we can't target an 18 IRR and a 1.8 multiple. We need to target a 3 times multiple for equity investors. We need to show them that emerging markets produce better returns. And often those emerging markets are real places that have real history, that just have broken systems to invite investment in, right? And I think that's what we're trying to do. We're trying to say we target no less than a 3x. We've hit 40x's, right? By opening up value in underlying real estate, we produce wealth that is not possible by investing in 4 caps in Fort Lauderdale, right? Like you just can't do it. Now, as risk grows for existing assets in places that have questionable futures, I think it'll become easier to say, look at an alternative place. But often places like Cleveland and places like Rochester, New York, and Syracuse and Portland, Maine has done well recently. I think it's a real ground level effort that has made that happen, along with opportunity zones across the whole city. But still, they're not reaching their potential. I mean, the answer is not, I don't like your project, not that I don't like your returns, not that I don't like you, but my piece of paper in front of me says I cannot check that box. I can't go to that place with my capital. And I'm sure you must hear that often from people that are in the process of trying to attract capital.
Unfortunately, I do.
Yeah.
And it's quite frustrating. We've gotten that before too, around what market is it, and it's 2 hours outside of a major metropolitan region. I don't know if we can do that.
But meanwhile, you have 4,000 units that are 98% occupied, and they're 60 years old across the board. And the cannibalism quotient on the place is off the charts. All you have to do is build 20% new apartments at 20% increased rents and do it to a level that's regenerative and investing in the community and part of a larger process. And you've changed the place fundamentally and produced above market returns. But it's hard to get that message out. And we're drowning in the sea of, we're all going to buy hundreds of like pre-existing rental apartments. They're class D, and we're going to turn them into class B plus rentals. And, all of a sudden we go through today's floating rate interest environment, and they're all underwater. But everybody's going to be flying on a G8, and everybody's going to be running around collecting rents from somewhere in Alabama and Arkansas and Texas. And there's this celebrity get rich quick thing that has always been in real estate, but it's become prevalent that type of thing happens. And institutionally, there's issues with institutional practices like monopolizing the single family home sale market by turning them into build to rent products in a place that wasn't studied or scaled for the build to rent product. It's one thing to do the work to prove that the build to rent product increases the economic viability of the place by adding to the existing stocks of single family home ownership or multifamily or townhomes or other products that across the board become a resilient economy. But by creating monopolies based on acute failures of previous intentions, it creates a market that is not resilient, and it undermines the economic health and social health of the place in which you're in.
You are preaching to the choir here, but doing it in a way that is so needed right now. And this is I'm just smiling. I wish that we lived a little bit closer together to keep on pontificating on this. What is coming up, Sean, is a question that I had written down earlier, and I'm glad I'm looking at it now, because you had mentioned more crowdfunding, retail investor, maybe, and I'm putting your words in your mouth on your raises. Why not go in the direction of creating a fund and doing a blind fund where you can go out and be a little bit more independent to get into certain projects?
We'd love to. We don't have people on our team that have done that or come from that pedigree. So to do that, we need to team up with a credible group that is doing that already, that is expert at that. One thing we don't want to do is ruin our credibility by trying to do things that we're going to half-assed, like fumble through, and not be able to speak the same language as the people that need to hear the fiduciary responsibility that comes with creating that fund, right?
Yeah.
We would do that in a minute. We would partner up with a fund. We're talking to a couple of groups that are talking about creating their own funds where we might be part of their business package. But we haven't gotten there yet. But we have not become yet the people that would go out and solicit from a pension fund or a family office $100 million fund to go and do this in that way. For anyone
That's a good
listening, we
answer.
invite all those calls. And if you have any ideas, we could do a podcast on fleshing out the business plan live.
Yeah. What a fantastic opportunity as well. And thank you for just being honest about where you're at and doing projects. Have you always used the term regenerative development? Like where
No.
do you see yourself in this lineage of regenerative thinking?
So a gentleman by the name of Bill Reed first brought up to us that we were not quite being regenerative, right? We were looking at the impact zone and ESG and resiliency. But he started to point out that some of the stuff that we were really doing was addressing systemic generational trauma. And we were attempting to regenerate a social investment through this economic uplift of a place. And when you combine that with the needed regeneration of the infrastructure systems and the environmental systems that regulate that place, we started to take on that term more and more. And it made us think more about what regeneration of a place actually meant, right? And how we could better that process. Because he clearly pointed out to us, and he was the first one who really clearly got it in my mind, that if you're sustaining a place, you're naturally riding the decline of that place. Sustainability over time is like the time value of money. The sustainability of a community or sustainability of the environment is actually degrading every day that passes by that you've sustained the same thing, right? So if you're not actively regenerating and moving the curve up, you're actually going down, which is eroding your investment, which is against your economic theory in the first place of why you should be developing in that place.
Good old Bill Reed, the provocateur of sustainability and regeneration. And for anybody listening, Bill is a good friend of the show and has been on, I think, a couple times now. Certainly has keynoted our gatherings that have happened on the East Coast the last couple of years. So I highly recommend everybody checking Bill out because it sounds like, Sean, he's wonderfully disturbed your thinking as well. And
Yes, he has.
Well, Sean, I'm recognizing our time here. I want to be mindful of that and just, heap some praise on. I really admire what you guys are doing. I mean, there's not very many development firms out there, everybody, that MPact Collective is in the company with and really pioneering this industry. Is there a way that you want to direct people towards maybe your website or a way to get a hold of you if maybe it is a group that specializes in fund creation and management?
Sure. If you check out MPactCollective.com, that's MPACT Collective.com, or Sean McLean on LinkedIn, or S McLean at MPactCollective.com. Feel free to get in touch with me. I love to talk about this stuff. We're super passionate about it, and we're open to all ideas. I mean, this is emerging. This is being created as we talk about it, right? And there are forces pulling against it, and there's other forces pushing it forward. So also happy to hear why we shouldn't be engaging in this process, and that it's a waste of time. I don't know. You can learn something from any one of those interactions. So,
well, they're all listening to another podcast. I can guarantee that. So.
Well, I appreciate what you're doing. I think, really congratulations on your success on doing. It's a lot of work to orchestrate this level of sophistication in a podcast, and the high quality of the guests and the massive arrangement of topics that you bring to light intelligently, which is that's not an easy skill. So congratulations on that.
Okay, that is a wrap. Thank you for tuning into the show today. If you got any value out of this conversation, be sure to subscribe to the podcast so that you don't miss future episodes. I can honestly say that these conversations have changed my life, my business, and how I steward my own home. If you want to learn more about our work at Latitude, where we partner with property owners, developers, and stewards to create thriving communities and resilient habitats, then you can find us online at chooselatitude.com. Also, if you have a project that you are needing help bringing to life or would like to align your investment portfolio with profitable investment opportunities that benefit communities and the environment, then you can reach out to me directly at neil@chooselatitude.com and we can start a conversation from there. Okay, that's it. Until next time, here's a friendly reminder that the water we drink falls from the heavens. The air we breathe comes from the beautiful symbiotic relationship we have with plants. The food that nourishes our bodies come from the ground we so cavalierly pave over, and that we all have a role to play to regenerate this planet.